Hello, trading is closed on May the 2nd, 2017. My last call said I thought that Monday's pattern was negative, and unless we gapped over this high, we should see lower prices with a good chance of gapping under this low. Well, we did see lower prices, but we also saw higher prices and unchanged prices. So the prediction was right, but not wonderfully prescient. Normally when I say we could go over the high or under the low with a gap at the open, and that doesn't happen, next thing I do is look for a close, little changed, and that's what we got. During the day there were a number of signals, number of targets. This target was hit. Here's a sell, here's the target, that was hit. This target was hit. The one target that wasn't hit was this one, 2386.33. Ultimately should print. Ultimate targets don't have any time frame, but they have a high percentage chance of working. There are about 150 of these a year. The system's about 15 years old. I think I have about 8 or 9 which haven't printed. So those are the odds. Just doesn't have to print tomorrow. I guess there's an FOMC announcement tomorrow. I think trying to predict what will happen in those days is a good way to lose money. There's a strong tendency for a whipsaw, and you can get stung pretty quickly. I'll just say I have a lot of resistance at this area. There's the obvious Fibonacci retracement. There's the wall into the close. There's a gap open, an all-day rally, and inability to close over any of these highs. Unless we gap over this high tomorrow, or at least trade over it promptly, we should see lower prices. If we do gap up, if we do break through resistance, and it's not by a large margin, I'd be aware we could have a gap and trap with gapping up and reversing it quickly. But for tomorrow, this is a negative pattern unless we promptly take out this high. Ultimately, this price should print, but it's hard to predict what's going to happen when the Fed makes its announcement, and I'm almost always flat going into it. And that's today's call.